What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is MULN, Mullen Automotive. This finishes at $1.02 today. That is down 9.73%.
And it's gone.
So we've been covering this stock for a few months now, ever since this first short squeeze to $4. It's since pulled back pretty significantly. Last time we discussed this stock, about 1.5 weeks ago, I said that this would probably continue to run to the upside until after the Russell rebalance is over, and then I expect it to sell off from there. And it appears like that's exactly what happened. The stock pumped due to fund managers rebalancing, and after the rebalance was complete, shorts coming in here and taking advantage. So today the stock did make top 10 on StockTwits. I believe it was actually number 2 after SPY. So once again, we're going to analyze the stock today. So there was a reason as to why the stock went down so much today. Today was supposed to be a catalyst, and we have some PR, or a lack of PR. So we'll get to the PR in a second, but basically everyone was expecting the Fortune 500 company reveal. The CEO, David Mitchery, has been talking for a while about this big order they got from a Fortune 500 company, said it would be revealed today, and it turns out there was no reveal today. So very disappointing. Markets didn't like it, apes didn't like it. So yeah, the stock is selling off about 10% today. Pretty nasty. All right, let's take a look at the PR real quick. All right, so first of all, it says when Mullen reports its quarter ending June 30th, the company expects to report in excess of $61 million in cash and cash equivalents. So they have money to survive in the short term. 61 million sounds like a lot, but it goes pretty quickly, especially in the EV industry. But that sounds pretty bullish because that's more money than they've ever had before on hand. It says that it delivered one van to an unnamed company. The company has requested some upgrades. They talk about how they got a loan from promissory notes. They talk about how it was added to the Russell 2 and 3000s. And they talk about raising $275 million through dilution. So yeah, nothing really new here. Just a bunch of old news and no Fortune 500 company reveal. So pretty disappointing here. All right, let's go ahead. Let's jump right in and analyze here. So first of all, this is a cup and handle in the making. Bottom of the cup being 75 cents. And there can be multiple possible tops. It can be 285, 320, 340, 360, or 425. And longer, this is part of an even bigger cup and handle, where the top can be the high of 1590. So those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. And then we do have a triple gap down. First gap down is at 1190. So that is a bullish indicator. That is telling us that the stock should come back up to 1190 to fill that gap. Second gap down is at 465. So another bullish indicator. That is telling us that the stock should come back up to 465 to fill that gap. And third gap down was recently at 130. So another bullish indicator that is telling us that the stock should come back up to 130 to fill that gap. So I think the gap at 130 should fill in the short term, but the gaps at 465 and 1190 are going to fill in the longer term. There's also a gap up at 60 cents. So that is a bearish indicator that is telling us that the stock may come back down to 60 cents to fill that gap. Looks pretty unlikely at this point, but possible. So be aware of that, guys. And here it appears like we have a symmetrical triangle forming. Right now, this is consolidating between 150 and $1. So it looks like there's a bit more consolidation to go. This should consolidate somewhere around 125. And then from there, it's going to break out very significantly either way, to the upside or the downside. So the symmetrical triangle is currently a neutral indicator. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is sitting on the support of $1. Which it finished around today. So if this goes to the upside, next levels of resistance would be 110, 115, 120, 125, 135, 140, 155, 170, 180, 190, 195, 205, 210, 215, 225, 235, 245, 250, 255, 265, 270, 280, 285, 290, and then $3. There is resistance above $3, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 98 cents, 88 cents, 75 cents, 60 cents, and then the low of 52 cents. So right now at the current price, $1, the channels to the upside are pretty decently sized. So expect a regular amount of price action if this stock runs to the upside. However, if/when this breaks 140 to the upside, the channel starts to open up and get wider. So expect a significant increase in price action if/when this breaks 140. But then if/when this breaks 195 to the upside, the channel starts to narrow. So from $1 to 140, expect regular price action. From 140 to 195, expect big price action, and then after 195, expect normal price action again. And to the downside, the channels below $1 are pretty wide, so expect a significant increase in price action if this stock continues to run to the downside. RSI is currently at 40, so not quite oversold and undervalued, but below average. So according to the RSI, the current price of 102 should be a little bit higher, and this did 119 million in volume today, way above the average of 32 million, so the sell-off today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So honestly, I can't say I'm surprised. The CEO has been accused of being a fast talker. He's pulled this over and over again, where he hypes something up, talks real big, and when the time comes to deliver, there's nothing. So longer term, the chart still looks pretty bullish. We got some strong bullish indicators in the cup and handle and triple gap down. But in the short term, it's a little difficult to tell. We're getting some pretty mixed signals here. So therefore, if you want to go long, not financial advice, honestly, $1 is a pretty decent entry. Not an excellent entry, but an above average entry here. But again, the channels to the downside are pretty wide. So if this does break $1, this can go pretty bad, very fast. So $1 appears to be some pretty critical support. Gonna take a lot of selling pressure to break that. So the way I would play it is I would set my buy orders to 60 cents. There is a chance that it comes back there to fill the gap. I think 60 cents would be an excellent entry. If it doesn't come back down there, then whatever, move on, look for a different play. But if it does, you're gonna enter at the literal bottom and a lot of upside from there. Again, in the long term, this should come back up to $11.90 to fill the gap. So from the current price of $1, that would be a 1,090% upside. So I would say going long at the current price, $1 would be a medium risk, very high reward play. Already huge upside potential, already worth a shot in my opinion. But if you're a little patient here, you may be able to get this back at 60 cents. And from 60 cents up to $11.90, that would be over an 1,880% upside. And I would say going long at 60 cents would be a low risk, very high reward play. So huge upside potential either way going long here. I would have no problems with you guys buying in here at $1. But personally, I try to get this back at 60 cents. So I can't support going long at $1. And if it pulls back, then you can just average down at these supports that I mentioned before. But personally, I try to get this back at 60 cents. I think that'd be an excellent entry. Now, if you want to go short without financial advice, I wouldn't do that. It's not necessarily a bad play, just a little too risky for my liking. $1 isn't exactly the best entry on the short side. It's a below average entry. But that being said, again, this can fill the gap at 60 cents. So there still is a 40% downside potential here, which is some pretty good money. The problem is this is a meme stock, retail favorite. So theoretically, this can go mooning / squeezing at any time. And you really don't want to get caught in that squeeze. So while you can make some pretty good money here on the downside, it's not worth it in my opinion. Too risky. Probably better off moving on and looking for a better short play out there in the market. I would say going short here would be a high risk, high reward play. Can work out pretty big, but a lot of risk involved. More of a gamble really than an investment. If you want to gamble, please do that at your own risk. But yeah, this isn't exactly the greatest short play. So pretty straightforward, guys. The PR drop today was very disappointing. Nothing new. No Fortune 500 company reveal. Earnings are supposed to come out soon, so maybe that'll make the stock bounce back. But yeah, disappointing day, down 10%. In the longer term, it still looks really bullish. In the short term, kind of hard to tell. So if you want to go long, $1 is not a bad entry. I can't support going long here, but personally, I'd hold off, try to get this back at 60 cents. I think that'd be an excellent entry. And if you want to go short, it can work out. Not a bad play, but pretty risky, so I wouldn't go for it, but there is a lot of downside potential. So if you want to gamble, if you want to go short, please do that at your own risk, and I would say cover at 60 cents where the gap is. So there are opportunities to make money on both sides here. Although I think the best way to play this is to go long at 60 cents. So sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is MULN, Mullen Automotive. Thanks everyone for watching today. I appreciate you guys. Please, like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.